Hello and welcome back to Dukascopy TV. Today in the studio I'm joined by Pierre Maliczak. He's president of Altarius Group and we're talking today about Swiss policies and regulations. Pierre, thank you very much for joining me.
You're welcome.
Now, last time we spoke to you in January, you were speaking about these new regulations that were described as the harshest in the world, but they were still in their proposal stages. So can you just explain to our viewers what's been happening between then and now?
Well, first of all, we are talking about the financial sector in general, but more specifically, we are talking about asset managers. Asset managers in Switzerland at the moment, if they are not managing any assets in a fund that is registered in Switzerland, is not subject to any specific regulator. That is going to change mid next year. And even if they do not manage any funds in Switzerland, even for those managing funds offshore, like the BVI or in Europe, they will be subject to a license, a proper license, a kind of a guarantee, a label of quality that is going to be overseen by the local regulator in Switzerland called FINMA. So what is new compared to last time? Now we know that all those asset managers are not going to be subject to that new license. If they have less than 100 million Swiss francs of assets under management, I mean invested into a collective investment scheme, they will not be subject to any license. And we know as well when it's going to take place. So the regulation is going to be put in place mid next year. And the way it's going to move is that an asset manager that decides to file for an application for a license will have 6 months just to file, and then 2 more years to obtain the license. So we are talking about another 2.5 years, because before the rules are in place.
I see. And you were talking about how these regulations affect asset managers, but both Swiss trade bodies as well as the Swiss Stock Exchange have welcomed, changes in the regulations to the Swiss Stock Exchange. Mm-hmm. So why have they welcomed this? Well,
when you are an investor, we are talking about an environment at the moment that is pretty difficult, right? So what you want to do when you invest is you never can guarantee the performance of a fund, of a product. But what you want to be able to say to anyone, especially to the end investor, if you are in the middle, if you are a bank, if you are a family office or an asset manager, is to say, I've done my best to secure the structure. That's number one. Number two, I've done my best to be able to say that if anything goes wrong, somebody will pay for it. And this is what's happening with the IFM directive. If anybody fails in its role of overseeing the structure, depository bank, for example, will have to pay, will be liable financially to compensate for that lack of control. And Switzerland, as a result, is a small country surrounded by European countries and by a huge market, by the way, of course, Europe, and cannot afford to be looked at as lacking of regulation, because otherwise anybody pretending is doing business out of Switzerland will not be considered as having the proper to qualify to be able to sell their products. So that's why the Swiss authority reacted pretty rapidly, actually very rapidly, when they saw the changes all over Europe in order to adapt themselves to fit the same standards.
So lastly, Pierre, because these firms are regulated by FINMA, does that automatically mean that they can trade in Europe?
Well, this is one of the most important questions that a lot of people are asking themselves before filing for a license in Switzerland. As far as I know, there is no automatic equivalence between FINMA and the rest of and the European member states. As a result, there is a risk that even if you go through a very long, difficult, expensive process to get a license in Switzerland, you might not be automatically able to sell your products in Europe. And that is definitely an issue that is a real issue. And that's why, and that's how as well Altarius try to help people to find an alternative, another solution, so another possibility by offering them local support in a European member state.
Pierre, thank you so much for sharing your insights with us today. But lastly, we're going to go on to our Dukascopy question. We ask every guest that comes into the studio, if you had $1 million to invest in the market for 1 year, where would you put it and why? So let's have a look at your options here.
Being quite conservative by nature, and because of the lack of visibility over the next year, that's what you mentioned, the next year, I will tend to be extremely careful and put my money in cash. I will choose cash because still not convinced that like a lot of people, we are out of the crisis. I see that the markets are extremely volatile, that for a very small news we can go up and down in a very, very volatile environment. And when I don't have a minimum visibility, I'd rather be very careful and make sure that the money I have today will be the same that the one I will have tomorrow.
Pierre, thank you so much for coming in and sharing your insights with us today.
You're welcome.
That's all from us here in the studio, but click back to the website for more interviews and updates. Take care.